the damage is already done from a mine production standpoint. It takes 15 years from inception to production for a silver mine to come to fruition. So we're already behind. The damage is already done, and the only solution is a higher silver price.
Maneco 64, home of alternative economics and contrarian views. I have the pleasure of speaking with Ted Butler today, and Ted Butler is a young financial independent analyst and a sound money proponent. And I'm really happy to be speaking with him because he's young. And a lot of the people in the sound money space, especially gold and silver, are considered old fogies or boomers. So, Ted, nice to meet you. And how are you?
I'm very well, Mario. Thank you for having me on. Obviously, I've followed you for a few months now. I think we interacted on LinkedIn a couple of times, but we share the same belief that gold and silver is money. The gold and silver belongs in a portfolio, despite what many fund managers and financial advisors act and fail to do. I may as well start by telling you a bit about why gold and silver for me. Originally, I wanted to be a financial advisor. I wanted to, help people improve and get close to financial freedom. I've seen a lot of the pains of money in my family and my friends, mismanagement of money. So that was something I was close to my heart. And I was very much on that route. I went to university in Liverpool, did an international business degree, continued to do my finance and investment management masters. I did that for 3 months and I dropped out. And I dropped out because I started to educate myself. I started to follow my intuition, to conduct my own research into the financial system, into fractional reserve banking, modern monetary theory, all these fallacies that we're taught as truth. And I began to smell BS, to be quite frank with you. And I decided that gold and silver should be part of a portfolio. I was outraged that it wasn't. And that thread is really the thread that I've followed for my entire career up to now. Just to give you an idea of what I do, for the most part, I'm a writer. So I write for the Morgan Report, for David Morgan primarily. I've been doing that for over a year now, primarily writing about gold and silver, but also uranium, copper, platinum metals, more broadly about the geopolitical and macroeconomic factors as well. And for over a year, I've been writing for the Ingoldby Trust Report. Ronnie Stoffler, very popular guy in this space, very well respected. And he, funnily enough, is publishing the Ingoldby Trust Report, which will be due out on May the 17th. And I've written the silver chapter, as I did last year, which I'm sure we're going to dig into today.
Great. And yeah, so what made you realized that our system was not fit for purpose? In my experience, for example, it was funny because it was in the early 2000s and I was working in the city of London, and then I started reading about the Austrian school. I bought a gold coin, and I went to like a Libertarian Alliance event in central London, and actually Boris Johnson was speaking there. But there's also a guy called Samuel Britton who was an economist. I think he's passed away. And after the Boris Johnson speech and the event finished, I went up to talk to Samuel Britton, and I showed him a 20-pound note, and I said, what do you think of this promise? I promised to pay the bearer the sum of 20 pounds. And he looked at me really, as if I was a strange person. I said, well, don't you think that's a bad thing, that they don't pay you anything and they promise you something? And he just ignored me and didn't even talk to me. And that was around 2004 or 5. And we know what happened in 2008. So yeah, I'll let you tell the viewers what really triggered you to look into. Was it something in your MBA or master's that you were doing that?
Yeah, I think, well, first of all, there's a 60/40 portfolio that was being shoved down our neck. That was the supposed bastion of financial stability. And I started to look into the returns of it, and think, actually, a minute, if you just held gold here, wouldn't you be better off? And certainly since 2000. Um, I think also just the realization, obviously, I was a student at the time, noticing that with inflation, our purchasing power was being diminished. I'm also looking towards the people above me who are potentially in careers and starting families and finding it very hard to get on the housing ladder. You know, the disparity between income and the housing price now is widening. It's like a crocodile jaw, and that's not sustainable. And I looked into particularly it was the Mike Maloney Secrets of Money series, which was kind of my red pill moment. So that was the first kind of educational resource that led me to the belief that I have today. And that covered a lot of prescient themes like de-dollarization, which we're seeing today, albeit gradually. It's happening for sure, as people are dumping treasuries and stocking up on gold in emerging market central banks, gold being increasingly used in international trade. So it's just, and also you've got to look at it in the historical context. When you realize that all fiat currencies go to zero, and when you realize that oftentimes the result of that was a return back to gold, I'd much rather use that as a metric of my finances than, speculate in something less solid like Bitcoin, which I'm not completely poo-pooing, but we'll get to that.
Yeah. And yeah, financial, you wanted to be a financial advisor. And my experience with financial advisors is that they know a lot about the taxation situation, and they just say, oh, you should put your balanced, funds and everything. But if you ask them questions about, macro and the economy and stuff,
No,
they can't really answer you.
and
And
yeah. Sorry to interrupt. I've got an
yeah,
interesting point. It's almost like a doctor, isn't it? You sit down, you go in, and they prescribe you with a medication, but oftentimes the doctors don't know necessarily what they're prescribing you. They just think that's what the options is. It's like the illusion of it optionality, isn't it? When you think about the funds that they allocate you into, oftentimes they probably don't know. They just have like scores of how high the risk tolerance is, scores of how high the return ratio possibly is, and I don't know. I think now we're entering a period where active management is becoming more important, especially to pick the stocks in a sea of what can be a lot of shady companies, I think, and they'll get exposed when the rising tide exposes them.
yeah, and did you know that in the UK, under the regulatory regime of the FCA, physical gold and silver are not a financial they're not financial instruments. So
I know.
you will never have a financial advisor tell you to buy physical gold and silver.
Because it's not profitable for them. But this is the sad thing. They're putting profits ahead of their fiduciary obligations to
Yeah.
client, and that's incorrect in my view. I think they should take the hit on profits and the knowledge that if they don't allocate to gold and silver at this time, their clients are going to be looking at them in 10 years saying, "What was I paying you for? Why were you not being more responsible with my money and reading the room and looking what's going on with fiat currencies?" So it's their
Yeah,
loss.
yeah, I think people need to be more self-reliant in terms of learning about investments and managing their own affairs. So, uh, what do you want to talk about today? You said you want to talk a little bit about silver, then gold, and then maybe Bitcoin. So let's start with Bitcoin, uh,
Okay.
because I used to cover Bitcoin when I started this channel back in 2015 and other cryptos, but back in 2017, I saw things that I didn't like. One thing was that they created Bitcoin futures and options on the CBOT. I saw that uh, Wall Street firms like Goldman Sachs were buying exchanges indirectly, and it was just getting very frothy. I had read about, the white paper back in 2011, 12, and it sounded really good. But one thing that has always bothered me is that I don't really know who created it. They say it's Satoshi Nakamoto, but where is he?
Yeah, those are really good points. I think the first thing I want to say is I don't completely write it off. I think there are some merits. There is a need for a new form of exchange, a new form of store of value. I wouldn't say Bitcoin is necessarily a store of value yet, because to be that, it would have to earn it through a proven track record. I still think it's a speculation. I think it's a valid one at that, as the dollar continues to die. But I think there are a lot of risks, and I think there are a lot of risks that the Bitcoin maxis are blind to. I recently did an interview with Daniela Camboni where I said that Bitcoin was compromised. I mean, when I say it's compromised, I mean some of its characteristics. If you read the original white paper by Satoshi Nakamoto, the intention is very clearly that it's meant to be a payment system. So I read into that as a means of exchange. But you look at what BlackRock's doing, and you look at what the financial institutions are doing, they are pigeonholing Bitcoin as an investment. So that's, for me, is straying away from what its intended characteristic was supposed to be, which was supposed to be money. And if it's going up against gold as a store of value, then I feel like that's a battle it's destined to lose. So I think Bitcoin, ultimately, it's multifaceted. There's different purposes for it. I think it can be used as money. But I just think then you think, even if it was, would the governments be incentivized to do so? Would Bitcoin come directly in the crossfires of a CBDC? That's a question you've got to ask if you're holding Bitcoin. Do they really want the transparency that comes with the blockchain? Or would they rather have, a one-way street where they can see what you do and you can't see what they do? I would argue the latter. But then again, it's always important to nuance this and preface this with the fact that, Switzerland's central bank are potentially considering Bitcoin as a reserve asset, or they're being encouraged to by a group of lobbyers. It's being used as money in El Salvador to a reasonable degree of success. So it's always much more nuanced than simply Bitcoin is a joke. I think it's worth a speculation. I would just say silver, gold, Bitcoin in that order for me.
Yeah, and you mentioned that early on, and in the white paper is supposed to be a means of payment, and I remember that well. And nowadays, recently you had this halving event, and the cost of sending Bitcoin is like exorbitant. And I remember as well reading that it was going to be an alternative, and it was going to be to the banking system, that it would be peer-to-peer, and you could pay each other with it, and it would be like costless almost. So yeah, that's failed. But the excuse now is that, oh, it's too important to be a means of payment, is just a store of value. What else is it going to be?
This is it. But if this store of value characteristic rests on the perception of value by people, in other words, the network effect, I say it's valuable, the next person says it's valuable, that's not really a basis for store of value. A store of value has to be proven, for me, through historical means, through time and time again of returning back to, like gold. And Bitcoin, unfortunately, won't be able to establish itself as that for many years. I mean, it's younger than me. People seem to forget that. This is, it's a nascent technology that's only 15 years old. So there's still a lot to go, but I wouldn't write it off. I'm just cautious.
Okay, great. So let's move to gold. We'll leave silver to the end. So what's your view on gold, and especially now that we've seen gold break out? I know it's correcting in the last week or so, but I still think gold is just a reflection of fiat currencies failing. Is that how you see it?
Yeah, I'm currently writing an article at the moment called Gold is Flying, the Dollar is Dying. So that's kind of where I see the world at the moment. I think there are many reasons why gold could outperform this summer, even though the summer doldrums are typically known as a period where the gold price takes a moment to take a breather. I do believe that we will get an interest rate cut this year. I don't believe it will be today, like in the FOMC meeting. But I think the pain being inflicted on regional banks, on consumers, and on the Fed itself through the interest payments that it's incurring on its debt will prove sufficient reason for them to cut at least once this year. I do see a scenario where they just hold, but you think about they're accumulating $1 trillion of debt every 100 days. this is completely unsustainable. And now we're entering that kind of exponential function. I'm sure you've seen the graphic of the football stadium filling with water.
Yeah.
And the last portion it goes so quickly. And that's where we're at with federal debt at the moment. So as long as those trends remain, as long as the desire to decouple from the dollar remains, which it does amongst the BRICS countries, Thailand recently, I know it's an odd one, but I noticed that they were allocating to gold in their pension scheme, government pension scheme. I noticed that Turkey are stacking gold like no tomorrow. Obviously, the People's Bank of China are one of the main sources of the gold demand at the moment, and I think that will continue. And then you've also got the geopolitical risk, the war premium, and that could easily result in a spike, whether the Houthis get more volatile or, there's so many reasons that could cause outperformance in the gold price at the moment. But the fundamental underlying factor is that the dollar is being dumped and gold is being allocated to in place of that.
Yeah, and you mentioned the debt, and the example of the football stadium where you're just dropping a little drop of water every second or so. There's another analogy, or not analogy, but if you take a penny, a cent, and you double it every day for 30 days, you'd have $5.368 million after 30 days. So that's how, this
Yes.
that's how dangerous the debt is. And I don't see either any side of the political aisle in the US trying to contain that. I mean, we saw recently that 95 billion or so package go through, and the Speaker of the House, a Republican, went right along with it.
Mm-hmm. Yeah, it's outrageous, I think. And I also would argue that potentially Trump getting back in November, which I think he will, whilst it may be good for the economy, I think he could potentially, do something inflammatory on the geopolitical scale. So there's always that risk with Trump, but, I tend to agree with his economic side of things. Although I'm wondering whether he might be too heavy-handed on the international stage when it comes to the management of global conflicts. So there's lots to be concerned about on that sense, but ultimately that would lead to a higher gold price. So you got to hedge effectively.
Yeah, I spoke this morning in my video about there's been a story about Trump advisors saying they're going to punish countries that don't use the dollar. And I'm not sure if that's what Trump wants to do, but his advisors are talking about it. That's another.
Was that in regard to South American countries? I think I briefly was listening to that. Was it like
Well, I think
Brazil and
it's
Argentina?
I use that as an example, but it could be any country. I think, the BRICS and Global South, that's who they're worried about. But it's not the way to influence people and get them to deal with you by punishing them. And the reason why I think one of the big reasons why the dollar is, not moving forward so much anymore is because they sanctioned people, not just with the Russians, but anyway, um, yeah, and Trump, don't forget when he was president, uh, yeah, the finances weren't that great either. And I think he's looking to reinstate his tax cuts. And I think cutting taxes is good, but if you don't cut the size of government and spending, that's also very inflationary. So, um, yeah, what about silver? And you told me that you're writing a piece for In Gold We Trust, and I like that publication. It comes out once a year. I like especially the report card they have about how gold has been doing since the year 2000. And I know you can't really go into too much details because your research on silver is coming out, or your piece is coming out on the 17th, but maybe you can give us some idea of what you're thinking in terms of silver.
Yeah, of course. Yeah, exactly. I appreciate your kind words about the In Gold We Trust report. I can talk about the Silver Institute's report, which I'm obviously basing my analysis of. Genuinely, Generally, the Silver Institute is the best that we have in terms of information, metals focus, carry out the report. There are occasionally times where they make mistakes and the revisions are necessary, which has happened before, but that's just something to bear in mind. Ultimately, we're entering the fourth year of consecutive supply deficits for silver. This is expected to widen in 2024 to minus 215 million ounces. That's up from 184 million ounces deficit in 2023. In 2023, there was a bit of a demand drop overall, led by the jewelry segments, the silverware segments, and the net physical investment demand segments. But ultimately, this wasn't enough to prevent a deficit. So you were entering a situation now where, much like uranium, much like other commodities in the past that have been in these structural deficits, you're relying on above ground inventories, in other words, secondary supply to meet the demand. The problem is this is unsustainable because the amount of silver in these above ground inventories is not unlimited. In fact, TD Securities just released a paper about a month ago stating that the free float of silver available in the LBMA inventories, which is the largest silver inventories in the world, counting for about 75% of global inventories of silver, their free float of silver would be depleted in the space of 2 years at the current pace of demand growth, at a 3-year compound annual growth rate. So they're basically stating that there's about 311 million ounces of silver left in terms of what's actually not in ETFs and what's available to restock ETFs in the case of a silver squeeze. And that makes the market very vulnerable. At the moment, industrial demand is having to be met by these inventories held on exchanges or elsewhere from private holders. Recycling only marginally, I think it decreased 1% or increased 1%. So the incentive to hand silver in at these current prices is not there. So the only solution to, one, increase mine production to close the deficit, increase recycling to close the deficit, or incentivize private investors of silver to hand in their silver to the exchanges so they can restock the inventories, is higher prices. We cannot continue in this period of stagnation with the current supply deficits as they are. The fundamentals just don't make sense. So whether it's tomorrow, whether it's next year, whether it's the year after, the damage is already done from a mine production standpoint. It takes 15 years from inception to production for a silver mine to come to fruition. So we're already behind. The damage is already done, and the only solution is a higher silver price.
Yeah, and the recycling part as well. It doesn't really pay to recycle with the price so low in some instances. And the geopolitical situation, I think, is dangerous as well. And it makes, investing, maybe buying silver properties to explore and mine very difficult, I would say. And there's also a lot of demand now coming from China for their green policy, and even India. I saw they bought a lot of silver recently for solar panels.
Indeed, they did. Yeah, they bought about 70 million ounces. It was quite unbelievable, actually. I think Adani Green Energy is the company behind the world's largest renewable energy plant in India. It's 5 times the size of Paris. Just let that sink in. And in February, they imported 70 million ounces of silver, which was the equivalent of 64% of the country's entire annual silver imports in 2023 in 1 month. And it was also, in 1 month, more silver than the US Mint produced in American silver coins over the past 3 years combined in 1 month. So that's not inconsequential. That's huge. That suggests to me that India are going to be requiring silver for these solar panels and other applications like jewelry. Obviously, India is a huge consumer in jewelry fabrication. So, they probably thought, they're thinking in their head, if I can get it cheap now, They're probably wary of what's going on, wary of the potential for a silver squeeze. They think let's get it now, and then we've got it at a low price, and we can put it in to industrial applications or wherever we want to use it. But ultimately, China is still the main consumer of silver. It comes down to, of course, solar demand. And many people think that this was going to slow down on the back of, President Xi's inability to deal with the deflationary spiral. I actually think that President Xi's attempted solution to these issues plays into silver's hands, because he's essentially refraining, or he has been tentative to use economic stimulus, and he's been trying to manufacture and grow his way out of it, and that obviously encompasses industries like solar, manufacturing of solar panels, for which China has an 80 to 95% share of the supply chains. China's solar capacity additions in 2023 were unbelievable, absolutely blew everybody else out of the park. We're talking 23.8% more than the entire 175 gigawatt US capacity fleet. So the US entire solar fleet is smaller than the China's 1 year capacity additions in 2023. See what I mean? So this of course renders China the most important determinant of the silver solar demand in general, but also the silver price more broadly.
Yeah, I remember it was 3 weeks ago, maybe a little less. Janet Yellen went to China to try to encourage the Chinese and President Xi to do more stimulus spending, like send the Chinese people stimulus checks like the US does. And apparently Xi Jinping said, we're not into the policy of welfareism. We want to grow our economy. We want people to go to work. We want to invest in production.
Which doesn't that sound very libertarian? It doesn't.
Yeah. I know it's weird. It's strange that a supposed communist country is giving a capitalist free market country
Lectures, yeah.
lecture. Yeah. So about the silver price, and I mean, and we've known for the last few years that there are a lot of shortages, that they're coming. Countries like Mexico and I think Poland as well. Their below ground reserves haven't really been explored that much. We know that there's not too many pure silver miners out there, that they depend on the mining of other base metals. So what's your view on the silver price, and how come we're still, basically half of where the silver price was back in 1980?
Yeah, no, that's all good points. I think ultimately the fact that these above ground inventories have been mobilized has kept the lid on the silver price. I do believe that, there are incidences of spoofing, short-term price suppression, I would say, by the banks. I think that does happen. I don't think it's a long-term structural collusive manipulation. I think it's just small instances where the stars align and they believe that it's possible. But ultimately, the supply-demand imbalance has to register with the price at some point. It hasn't done because the demand has been met by the existing inventories of silver. But like I say, those are being depleted. Whether you look at the Shanghai Gold Exchange, whether you look at the LBMA, whether you look at COMEX, silver is coming off the exchanges, 30 to 40% since like a peak in 2021. So this is not sustainable. And the only solution really to meet the demand is a higher price. I know that sounds quite simplistic, and that demand, even though it decreased by 7% in 2023, is projected to increase again in 2024 and rebound. And I just wanted to come back to solar actually as to why I believe that will happen. there's currently a disparity between solar capacity and solar demand in China. And that's helped keep the price of solar panels affordable. Because obviously, if the demand is lower than the supply, the price can remain affordable. And that's driven solar panels to more affordable than they've ever been. And this is expected to continue because, like I say, President Xi is manufacturing his way out of this economic downturn. So that capacity is going to remain ahead of demand for the years to come. As a result, prices of solar panels will remain affordable. As a result, adoption around the world will be quickened, in countries, especially like India and Brazil, where there's a lot of already solar capacity under pre-construction. And as a result, solars are going to become the largest silver demand category by 2024. So I just wanted to dispel this myth that China is somehow undergoing, economic pains, which they are, is the end of silver solar demand. I think it's very important to make the distinction that that's not the case.
And what about investment demand? The average person buying silver as money and the protection against inflation. Do you see that coming? Is that happening in China? And do you see it coming to the West as well?
Yeah. So typically, now that China's middle class has become more wealthy, and as China's become more of a developed nation, gold tends to be the preferred option. If you look to countries like India, Thailand, Pakistan, all these industrializing countries, affordable silver tends to be the preferred option. I think also when you look to the US, for example, you look at silver being stocked in Costco, and you look at the success of the gold sales at Costco. I think we could enter a possibility where the lesser income facets of the US population opt for silver as a means of protecting their purchasing power. Ultimately, a lot of this will be contingent on gold's ability to continue rising. Obviously, as we know, silver goes on to outperform gold in its own bull markets and has done 6 of the last 7 times since 1967, if you're counting up the 2021 outperformance. So there are many reasons to be bullish on silver from the investment demand side. And also, it's important to understand that if there is a cut, like I say, there will be this year in the interest rates, even if it doesn't come this year, silver is proven to have an inverse correlation with interest rates. In fact, in the last, since 2000, I believe it is, silver has outperformed an average of 340% in the rate cutting cycles. So it's proven that it still has that response to monetary factors. Yes, it's becoming more industrialized, but this is not silver's identity crisis. This is not the end of silver as a monetary metal. It still functions in line with gold, even though it's starting to trade more closely with copper. It still follows gold in terms of correlation, 0.89 at least, going back to the 1980s. So I have no doubt that when the monetary fuss kicks up, silver will respond accordingly with gold, and those patient investors will be rewarded.
One final question. Any projection for the gold-silver ratio, where we could go down to?
Yeah, I think 70 is a crucial level, but we wouldn't need to go very, very far in terms of silver. Basically, if let's say we're at $2,400 silver price and we're at an 80 gold silver ratio, that's already $30 silver. 70, we're at $34 silver. 60, we're at $40 silver. So it can quite easily stack up. Personally, I think the 70 will be a crucial level. I think David Morgan always says there's more investors coming after will come in after $30 than they do prior to that. Because they start to sniff the potential. I think Rick Rule said it as well. He said, something along the lines of, I don't want to misquote him. He says, the reason I love silver is because everybody hates it. You know, it's this idea of going for value in a generation that I exist within, where the tendency is to go for momentum, is to chase the speculative gains in the likes of Nvidia and the likes of Bitcoin or whatever, and these cryptocurrencies. There's so much undervalued stocks, especially in the gold and silver miners who haven't yet followed. And there's so much value in just silver as a pure play in terms of how much it could go on to outperform gold, and how much it still hasn't yet quite, it started to get going, but it hasn't really got going yet. And I believe it will. And I'm holding as much as I can within reason, whilst being diversified, of course. And yeah, let's hope we're right.
Yeah, and to wrap up, could you tell the viewers where they can find you, and where you who you work with in your writings?
Sure. Yeah. So primarily, you can just go to tedjbutler.com. It's still kind of under construction, my website. I've only just started on this track, so please bear that in mind. You can find all my social media links on there. Tend to post on LinkedIn the most, but I'm going to be becoming more vocal on X, I think, in the coming weeks. Like I say, I write for the Morgan Report, so you can go to themorganreport.com and subscribe to our monthly subscription. We cover all things macroeconomic, geopolitical, metals, and we even include our mining allocation, the stocks that we hold at the end, so you can follow what we do. In Gold We Trust Report, we'll be out on May the 17th. You can find my chapter on silver, amongst many other things, tackling the inflation debate, tackling gold, where it's headed next, relative to stocks and bonds, all sorts of fantastic insights. And finally, I write for Prospector News as well, which is a little magazine by a guy called Mike Fox, covers all things commodities. And I'll be writing about the impact of electrification on transport systems. And I'm going to be writing about which metals are used in those systems. So that's going to be my next article, which I think will be out in the next 3 or 4 weeks. So yeah, that just about covers it, I think.
That's great, Ted, and hopefully we'll be talking again soon. Yes, I wish you a great day, and it was really nice speaking with you.
Thanks, Mario. Thanks for having me on.